Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look at a trade idea that I'm monitoring at the moment. It is relating to the S&P 500, so let's jump straight into the charts and talk about what's going on. I've got here one-day candlesticks, a CFD that tracks the price of actually the S&P 500 futures, the front month futures, not the actual SPX index itself. But regardless, it's pretty much showing the same thing. And you can see that on Thursday, uh, ahead of the market open, we are down a little bit, about 0.8%. And we're seeing this continued retracement of, if you remember last week, guys, we had this big historic rally, a 5.7% move higher in one day. And that was after that softer than expected US core CPI, well, just generally CPI data. And then earlier this week, we had some PPI data that was also softer than expected. So the US inflation picture clearly improving, but nonetheless, we are seeing a bit of a retracement. Why? Well, we did just have an update yesterday from the US consumer, US core retail sales data and retail sales data, both much stronger than expected month over month. Last month, both growing 1.3%. Which shows that the US consumer remains very, very strong, which, you might think that's good news. And it certainly is for the consumers who are still spending, but it keeps pressure on the Fed to continue tightening, or at least that is what people are thinking in wake of those numbers. Really, what you'd expect with all the Fed tightening that we've seen is for the consumer to start weakening, potentially the labor market to start weakening as well, and those two factors combined would help bring this inflation back to target, which doesn't seem to be the case just yet. So just triggering a little bit of concerns that maybe that optimism post soft inflation data was a little bit too much, which is why we're paring back a little bit this morning. In terms of the technicals and the charts, I still think we're in this uptrend that you can see I've got marked up here. There's the upper bound, there's the lower bound. But is history repeating itself? Because you can see in the last couple of months, this 200-day moving average, which is there in green, has acted as a pretty good level of resistance. Back in April, it was a top before we then went to hit fresh annual lows. Again in August, the 200 DMA was a top, and then we hit fresh annual lows. We didn't quite hit it earlier this week, but we came very, very close. Is that another top? And are we on the way to fresh annual lows? Well, I mean, it's too early to say that at the moment. I think you need to be monitoring the fundamentals and the technicals here. The fundamentals being, if we continue to see US inflation easing, and if we do start to see that long-awaited signs of weakness in the labor market and the US consumer, that could pretty much mean that peak Fed hawkishness is in, then you could probably say that maybe this isn't the top. In the short term anyway. But then, if we do continue to have a very strong US labor market and strong other economic data prints in the US as well, then even if inflation is peaking and coming down, there will still be concerns that it will take a very long time for inflation to get back to the Fed's 2% target. Because it's not just about inflation coming back from, it was at 9.1%, remember, and coming back to 5%. That's not good enough. The Fed needs to get inflation back to 2%. And, if the labor market's still very, very strong, if consumers are still buying, the Fed might still need to do a lot more regarding tightening. And then technically speaking, if we break below this short-term uptrend, if we get below this 21-day moving average here and the 50-day moving average there, 21-day moving average is in blue, by the way, and the 50 is in red, then I think that could open the door for some technical selling and potentially a retest of these annual lows. So pretty much that downwards break, I'm not sure if it's going to happen. I'm going to be watching to see how things go. But that downside break is something I'm keeping an eye on because if we do get confirmation of such a break and the fundamentals are still concerning and pointing towards significant Fed tightening, and if we do continue to get a worsening of the US economic environment, like we just had an update from Target, which caused a bit of turmoil in US chip maker stock names, then we certainly could be headed back to fresh annual lows. But yeah, that's something I'll be monitoring, guys. I hope you all enjoyed the video. I hope you found it informative, and I'll see you all in the next one.